Okay, so let's talk about this because it's something, a lot of people run into.
Yeah.
You've put in the hours, right? You've studied the technicals. Maybe you've even followed all the gurus out there, like religiously.
Yeah, done all the homework.
Exactly. But let's be real, you're trading. It still isn't consistently working out the way you want. And
Mhm.
you're left wondering, why do those trades fail? It can be incredibly frustrating.
Oh, definitely. We've all been there.
Staring at a losing position, thinking, what did I miss? What went wrong this time? So here's a question. What if the real enemy, the real obstacle, isn't actually the market itself? That unpredictable beast.
Right.
What if it's something much, much closer to home?
And that's really where our source material today comes in strong. The core idea, the big insight, is that most traders, they fail not because their strategies are necessarily bad,
Okay.
but because their mindset is holding them back, a poor mindset. So this deep dive, it's all about Mark Douglas's Trading in the Zone. It's a classic for a reason.
Yeah, I've heard so much about it.
It just fundamentally shifts your focus away from only looking at external market stuff, charts and news, and towards your internal behavior, how you react, how you think as a trader. We're going to explore why psychology, honestly, trumps strategy for consistent success. And maybe more importantly, how you can actually cultivate that right mindset.
Okay, let's definitely unpack that. So, our mission here with this deep dive is basically to pull out the most crucial nuggets, the real gems of knowledge from this book. Kind of offer you a shortcut to understanding what having a market mind truly means.
A shortcut to that perspective.
Yeah, we're talking about viewing every single market move, every win, every loss, as just neutral data.
Data within a probabilistic system.
Right, stripped of all the personal judgment, the hope, the fear, all that noise. It's really about changing your perspective, isn't it? Not just tweaking your charts again.
Precisely. Perspective shift is key.
All right, so to kick us off then, Douglas throws out this idea that feels, well, almost backwards compared to how we usually think about markets. He says you don't actually need to know what happens next to be successful.
Yeah. That one stops people in their tracks.
What's the typical reaction to that? Because it sounds crazy at first, right? How does he reframe it?
You're spot on. It clashes hard with our instincts.
Sure.
Most traders, they absolutely believe they have to predict the market. Certainty is the goal.
Right, gotta know where it's going.
But Douglas says, look, the market, especially short term, it's inherently random. There's noise. Trying to predict every single wiggle it's futile. It just leads to frustration, emotional roller coasters.
I've been there.
We all have. So instead, he says, you need to learn to think in probabilities,
Yeah.
not predictions. Think about a casino. How does it make money consistently?
And it's not because they know the outcome of every spin or roll.
Exactly. They don't know what the next roll of the dice will be. They just know they have an edge, mathematically. And they understand the probabilities over thousands and thousands of events. Your consistency as a trader comes from applying your edge, whatever it is, repeatedly, not from nailing every single trade. It's a really profound shift. Prediction versus probabilistic thinking.
That is a huge mental leap, especially if you're caught up in the daily noise, the tick by tick. It really puts the focus on the bigger picture, doesn't it? The long game, the aggregate result, not just this one moment.
Absolutely. The law of large numbers for your strategy.
Which I guess brings us neatly to what Douglas calls the 5 fundamental truths, the things every trader just has to accept.
Indeed. And these are really the bedrock, the foundation for getting in the zone. And man, they challenge some core human desires. Okay, so first one, anything can happen.
Anything.
Anything. And this isn't just about, oh, I might have a losing trade. It's deeper. It's realizing that any certainty you think you have, it's an illusion. You might see the perfect textbook setup.
Yeah, looks golden.
And then, bam, some random news event, a tweet, whatever, just blows it up instantly. Embracing anything can happen kind of frees you from that emotional weight of being wrong. Because there wasn't really a guaranteed right in the first place, just probabilities.
Okay, so it's about releasing that desperate need for control, that feeling that you should have known.
Exactly, letting go of that illusion of control.
And then the second truth ties right back in. You don't need to know what's going to happen next to make money.
Reinforces that probabilistic thinking we just talked about. Your edge plays out over time, not on this specific trade.
Got it. What's number 3?
Third truth. There is a random distribution between wins and losses for any given set of variables that define an edge.
Okay, unpack that a bit. Random distribution.
It means even with a winning strategy, you can't predict if the very next trade will be a winner or a loser. You might have 5 losses in a row, then 10 wins. It's random in the short term. You only know that over, say, 100 trades, your edge should result in more gains than losses or bigger wins than losses.
So no predicting the sequence. Just trust the overall edge.
Precisely. And the fourth truth builds on that. Your edge is only a probability.
Not a guarantee.
Never a guarantee. It's a statistical advantage, that's all. It plays out over many, many trades.
Right. And the fifth one? You mentioned it often gets overlooked.
Yeah, the fifth. Every moment in the market is unique.
Unique. How so?
The exact conditions, the exact participants, the exact context, it never repeats perfectly. So clinging too tightly to what happened last time, a similar pattern appeared. Or having rigid expectations, that can actually hurt you because this moment is fundamentally unique.
That makes sense. It stops you from saying, oh, this is just like last Tuesday, when it really isn't, not exactly.
Right. Keeps you present.
Okay, those 5 truths, they're simple to list, but probably hard to truly internalize. For you, looking at traders you've known or worked with, what's often the toughest one for people to really integrate deep down?
Oh, that's a good question. For many, and honestly, myself included back in the day, it's letting go of that need for certainty, that first truth, anything can happen.
Yeah, that feels fundamental.
It is. We are just wired, as humans, to seek patterns, to find cause and effect. We want explanations. We want predictability.
And the market just laughs at that sometimes.
It often defies that neat logic. And when traders really struggle to accept these truths, to really live them, well, that's when they fall prey to those powerful internal enemies Douglas talks about.
Okay, let's go there. The psychological battle. He really hammers home that our own brains, our own minds, can actually cost us money.
Oh, big time.
He zeroes in on fear and beliefs as the real culprits, right? Not the market setup, but what's going on inside your head. What does that battle actually look like day to day for a trader?
It's fascinating and sometimes scary how primal these reactions are. Fear is huge. The fear of being wrong.
Ego hit.
Totally. Or just the raw fear of losing money. It can show up in so many destructive ways. It's that little voice, that makes you hesitate when your system says go.
Yeah, second guessing.
Or the opposite, that irrational urge to jump right back in after a loss to make it back, immediately revenge trading.
Guilty.
Or maybe bailing out of a perfectly good winning trade way too early because you're terrified of giving back even a little bit of profit.
Cutting winners short, letting losers run.
Yeah.
The classic mistakes.
Exactly. And then there are our beliefs, often formed way back, maybe childhood stuff about money or risk, or definitely from painful past trading losses. These beliefs heavily, often unconsciously, influence our decisions now. These aren't rational, objective market decisions anymore. They're emotional responses hijacking the process. Fear and flawed beliefs taking the wheel.
Wow, and it really sounds like you're fighting yourself half the time, which must be absolutely exhausting.
It is exhausting and counterproductive.
So, what's the solution according to Douglas? How do you actually reprogram these deep-seated fears and beliefs? Because it can't just be about, okay, I won't be scared next time, right? Trying harder doesn't seem to cut it.
No, definitely not. It's far from just applying more willpower in the heat of the moment. That usually fails. Douglas suggests this reprogramming happens through consistent, deliberate repetition. Repetition of new, positive trading behaviors. And, crucially, gaining market experience from this new probabilistic mindset. You're essentially trying to build new neural pathways in your brain.
Rewiring.
Exactly. Replacing those old, destructive, fear-based habits with disciplined, detached execution based on your edge. It's about cultivating a consistent approach, trade after trade, day after day, until that becomes second nature. Until your rational, strategic brain is firmly in charge, and the emotional brain kind of takes a backseat during execution.
Okay, that makes sense. It's about building discipline as a habit, not just relying on it sporadically. Which leads us right to the core concept, the zone. We hear athletes talk about being in the zone, right? That state of peak performance, effortless flow. What does it actually look like, feel like, for a trader? And how on earth is it achieved? It sounds almost mythical.
It does sound mythical, but it's achievable. When you're in the zone as a trader, the primary feeling is calm. Confident, but calm. And emotionally neutral.
Neutral, not excited by wins or crushed by losses.
Precisely. There's no fear of being wrong, clouding your judgment. There's no fear of missing out, that FOMO anxiety, no desperate urge for revenge after a loss. It's a state of, pure execution. You're simply observing the market's information and responding according to your plan without all that emotional interference.
Like muscle memory, almost.
Kind of, yeah. Think of a chess grandmaster making a critical move. They're analyzing, yes, But in the moment of execution, they're not paralyzed by second guessing or fear. They're just executing based on their deep analysis and strategy. They're detached from the outcome of that single move, focusing on the overall game.
Okay.
It's like your trading plan becomes a reflex, honed through practice, not a constant internal battle of wills every time you click the mouse.
Right.
And you reach this state not through some flash of insight or a lucky streak, but through habitual discipline, through really, truly internalizing those 5 truths we talked about, day in, day out.
So it really drives home the point. It's not about finding the absolute perfect magic strategy,
Yep.
but about finding the perfect internal state, the zone, to execute any reasonably good strategy consistently. Why is that distinction so vital for long-term performance?
Because, like we said, even the world's best strategy, mathematically proven, whatever, it will absolutely fail you if you can't execute it consistently,
If fear makes you skip trades,
or ego makes you oversize.
or impatience makes you jump the gun.
All of it. The zone is what allows you to actually realize the potential of your statistical edge over time. It unlocks the strategy's potential by removing you, the emotional human, as the main obstacle. And Douglas gives some very actionable tips to help get there. It's not just abstract theory.
Okay, good. Practical steps.
One really crucial one is to mentally accept every potential trade outcome in advance before you even click buy or sell.
Accept the risk, basically.
Yes, but deeper. It means you're not hoping for a win or fearing a loss. You just accept that based on your edge, this trade is valid, and the outcome could be anything: win, loss, break even, and that's okay. You accept that range of possibilities before entering. Takes the emotional charge out of the result.
That sounds powerful. Removes the attachment to the outcome.
It does. Another huge one. Journal your emotions alongside your trades.
Ah, the trading journal. But focusing on feelings, too.
Absolutely. Not just setups and results, but how did you feel before, during, after? Were you anxious? Greedy? Impatient? This helps you identify those destructive patterns driven by fear or ego. It makes the unconscious conscious so you can actually start addressing it.
Oh, I can definitely see how that self-awareness would be critical. Shining a light on those hidden drivers. What else? Any more practical things?
Definitely. More practical considerations around managing risk and perspective.
Okay.
Using small position sizing, especially when you're learning or struggling psychologically, this is essential to manage fear.
Or if the potential loss doesn't terrify you.
Exactly. If the position is too large relative to your account or comfort level, the emotional stakes just become overwhelming, fear takes over, and you're far more likely to make irrational, fear-based decisions. Smaller size protects your capital and your psychology.
Double benefit. Makes sense.
And finally, practice detachment. Really internalize that any single trade is just one single instance in a very long series. Its outcome doesn't define you as a trader. It doesn't invalidate your edge. Unless you consistently lose, then maybe reevaluate the edge. It's just one data point in a much larger statistical game. Detach your self-worth from individual trade outcomes.
That's a big one, too. Letting go of the need to be right on every trade.
It's fundamental to the whole philosophy. And ultimately, it circles back to the main point. The consistency you're searching for, it truly is in your mind, not solely out there in the markets.
Okay, so wrapping this up, if it's not really about the market conditions in the moment, and it's not just about finding a better traditional strategy, what is the real edge that Douglas identifies? What's the biggest takeaway for listeners who are maybe looking for that breakthrough?
That's where it becomes, I think, really empowering. Your biggest edge. It isn't some new fancy indicator or a secret strategy someone's selling you. It's your ability to stay calm, objective, and disciplined amidst the inherent chaos and uncertainty of the market. You are the edge. Your mindset is the edge.
You are the edge. I like that.
Yeah. And look, Trading in the Zone by Mark Douglas, it's genuinely a foundational read. Anyone serious about trading should probably read it, maybe multiple times. It really helps master this psychological side. But, reading it is one thing. The real challenge, the real work, is to actually live its principles, to embody that mindset he describes day in and day out in your actual trading.
Practice, not just theory. So thinking about all this, we want to turn it back to you. Listening. Reflect on your own experience. What really stands out to you as your biggest struggle when it comes to trading? Is it primarily about mindset, dealing with fear and discipline? Or do you feel it's more about finding the right strategy in the first place? Maybe it's a bit of both. Something to think about.